Okay, Mike Swanson here. I'm doing this video on May the 15th, and I want to talk about 5 stocks in the Nasdaq 100 that are displaying some warning signs that suggest that they're going to really fall into trouble in the next couple of weeks and the next couple of months. Yes, we have had a tremendous stock market rally from February to the middle of April. The rally has run out of steam, and when that happens, troubled stocks tend to really go into big declines. And these are widely owned stocks. Let me show you why they're in trouble. The first one is Apple. And there's a couple things that happened to stocks that were really popular, market leaders in the past couple years, that then go into a troubling fundamental transition and then really fall for the years to follow. The big warning sign is when you see a former growth stock have 2 earnings announcements in a row, or 2 over the period of 6 months, that cause the stock to gap down and run into trouble. Now, Apple did that in July of last year. It had an earnings report and got smashed. People tried to laugh that off or ignore it and hold. And then it happened again in November. Apple once again had a terrible earnings report, and then when the market turned down in January, Apple actually fell worse than the S&P 500, worse than the Nasdaq, worse than the Dow. So when the market then rallied back up, Apple wasn't able to rally like the rest of the market. And then when it had a third earnings trouble time, was just a few weeks ago, and it gapped down, and now it's already on new lows. But this is the lesson from Apple. 2 bad earnings reports that cause gap downs and stock market suffering or stock suffering lead to big declines to follow. I've seen that in the last 2 bear markets. It's playing out of Apple, and I can show you some stocks that it's also starting to happen with right now. Netflix was another big leading stock. It used to have big gap ups when it would announce earnings, but then in April it had an earnings report and gapped down very strong. It actually fell immediately after earnings in January too. But I take this April earnings announcement as a big warning sign. If we get another bad earnings report from Netflix in the next quarter, you got to get out if you're a Netflix, because it's going to turn into a total disaster. Another stock that could be in big trouble is also Google, because Google also announced earnings in April and gapped down on the news, has yet to recover. If that happens again, watch out. Because going into the end of the year, Google will turn into a disaster. And Google was a stock that used to announce earnings and gap up. In July, it had a tremendous, incredible gap up. Now it happened opposite. In April, a gap down. So be very, very careful. Now, the next 2 stocks are ones that are already doing this. Gilead had bad earnings, and it had a big gap down in December, a gap down in January on its earnings release, then had a horrible gap down in April. So we got 2 bad gap downs in earnings. It's already trading on the lows. Bad news. You got to get out of Gilead. It's not time to wait to see if this happens again. It's a disaster, and you want to stay away from it or bet against it, actually, if you want to make money that way. Intel, finally, got to speak about Intel, because Intel has done this too. It had earnings in January, gap down. Had earnings in April, gap down on the news. And it's a stock that's been lagging the stock market now since January 2015, when the market had the big rally in February through March. In April, the S&P got up near its high, Dow got up near its high. Intel could not get close to its highs. Intel is a laggard. Intel's trouble. Stay away from Intel. You want to own, you want to buy strong stocks, strong sectors, avoid the weakness. In 2 bad earnings periods, got to get out, especially in a stock market that's no longer going straight up, a stock market that's displaying some really dangerous characteristics, in fact. And stay tuned for more updates from me via email, and we'll still stay appraised of the situation of what's going on in the financial markets, and I'll be speaking with you soon.